the market actually wants to go higher. On a day like today, there are plenty of buyers who are either willing to look the other way on tariffs or are simply getting used to the disturbances from Washington. And that's why the Dow rallied 353 points, S&P gained 0.64%, NASDAQ advanced 0.31%. This was a day where we got the President Trump we expected. We had so many groups flying that it was tough to even come up with names or themes other than to say businesses that were under Trump 1 did well today. I don't know. I don't want to stick my neck out and declare that the correction is over. But it's worth delving into the possibility that maybe the businesses that went up today are ones that can thrive under Trump, too. First, let's establish what we've been through. A correction, that's what we've been through. It's a technical term, meaning a drop of more than 10%, which is what we had in the S&P 500 as of last Thursday. A peak-to-trough drop from a month ago. The NASDAQ was in correction mode long before that. So why not call the bottom? Because I'm worried about something that Treasury Secretary Bessent said yesterday on Meet the Press. First, Bessent told us that corrections are healthy. All right, that's simply not true if you own stocks. If you've got your retirement money in the S&P and it drops 10%, that feels incredibly unhealthy. Not just for you, but for the entire economy, because people tend to spend less money when their wealth vanishes overnight. Corrections are unhealthy if you are worried about tipping into a recession, and most business people I talk to are worried about that. Then Bessent went on to say that he knows from being in the investment business for 35 years that corrections are not only healthy, but they're normal. What's not healthy, he tells us, is, quote, straight up, that you get these euphoric markets. That's how you get a financial crisis, and, quote, interesting perspective. Goes on to say, quote, it would have been much healthier if someone had put the brakes on in 06, 07. We wouldn't have had the problems in 08, end quote. I kind of like that. But let me parse this with an understanding that I've been in the business 45 years. And as much as I would like to say that makes me better, more seasoned, smarter, I'm not going to do that. Sticking around for a long time simply doesn't give you the expertise that you might think it should. For example, when Bessent says corrections are healthy and normal, he's talking like all corrections are the same. That couldn't be further from the truth. Most corrections are not like the one that we have for the last few weeks. You can get a correction because the Fed changed its stance, the market got too exuberant, foreign problems have been exported to our shores, stuff like that. But that's not what we're talking about here. He knows that, not at all. Right now, people are worried about a recession that's caused by the President of the United States. It's a correction that has nothing to do with the federal government's transition to a more prudent spending philosophy. We Americans want that, as we are worried about the government borrowing more than it can afford, worried for our kids, for our grandkids, who are going to have to pay for the federal government's profligacy. Instead, this all had everything to do with a lack of consistency and a lack of certainty, something that should be obvious to Mr. Bessent for 35 years in the business, as it is for me after 45 years in the business. If President Trump had coolly and calmly laid out a strategy for evening the scales with our trading partners, I think he would have gotten a lot of buy-in. We're the only country that plays fair on trade, and that cost us countless jobs over the years. Foreign countries subsidize all sorts of their products, and then they dump them on our markets at cut-rate prices. China's the king of this. They're hardly alone, though. The numbers speak for themselves. For decades, our government let it happen because these countries were sending us lots of cheap stuff, and who doesn't like cheap stuff? But if you get to the point where Germany, South Korea, and Japan have saturated our auto markets, more than 50% of our vehicles are imported, for heaven's sake. No, this is not right. No other developed nation simply gives away their markets like that. It's infuriating. It's awful. It must be stopped.
Jim Cramer is back to ignite controversy and have a total meltdown on camera about Nvidia and its possibly not-so-bright future. According to Jim, the Magnificent Seven companies, including tech behemoths like Nvidia, Apple, and Microsoft, are gearing up for a monumental shift in artificial intelligence infrastructure, with a projected capital expenditure exceeding $330 billion by 2025. But is this the last hurrah for AI investment, or is it a glimpse into a future where more money is being spent? Welcome back, everyone, to Investocracy.
So is the implication there that there's some sort of Nvidia cliff out there that we don't know where it is, but at some point demand is really going to fall off?
That's exactly why the stock has lagged so much over the last 9 months, is that we don't know that. And in fact, we think this may even be peak year. 2025 may end up being the peak year. If we don't have a handoff from Nvidia's current largest customers like Microsoft and Amazon that have said their chip buying is going to plateau this year, to other customers like CoreWeave or SoftBank, then this may end up being peak year for Nvidia chips.
So that tone of caution, Gil, is interesting because there are others who say, you know, this technology is really just starting to go mainstream. And I take your point about using it on the phone someday, but the best models out there are still the ones that seem to be most chip intensive, right? Like Grok 3 is amazing. It's and is that not with 200,000? You tell me what the number is of these GPUs. So if I, as the end user, value having the best experience, the fastest, the most up to date, I like its tone. It's just very useful. So does that tell you, though, that they still need to continue this massive investment in NVIDIA GPUs?
Well, the vast majority of AI searches we're going to do are going to be, what's the best humidifier for this room? How do I entertain my 5-year-old at a restaurant? Those within 2 or 3 years, you'll be able to do on your phone and get terrific performance. Within, again, that time frame, 2, 3, 5 years, the only calculations that we're going to need the biggest frontier models for are the really tough calculations, protein folding, drug development, things like that, that will, by the way, end up on a quantum computer within 5 or 10 years anyway.
Well, that's the other question, is what does quantum do to this? Because if quantum comes in and accelerates the growth of all this, you can imagine that all of that processing power gets even into smaller and smaller devices. And are you using less chips in a quantum world by an order of magnitude?
That's quite possible. So in that world of 5, 10 years from now, we're probably using our phone for most AI questions, and we're using quantum computers for the really tough questions, at which points data centers just go back to being storage devices as opposed to where we do all of our AI compute.
So then, Gil, last question for you. Have we already hit a top in NVIDIA? Are we past the peak?
I think there's a couple of possible outcomes here. One is that this can continue for a year or two or maybe more, and NVIDIA can continue to grow into next year, in which case there's upside to the stock. If you put 30 times next year's earnings, you get closer to $160. The downside is, if this is the peak year and next year is the rollover year, then if they do $3 of earnings, then we're talking about a $60 price target. So that's the range of outcomes in NVIDIA. It's really critical for us to know whether 2026 will be a growth year, as consensus expects.
According to the latest insights from Edward Yardeni, the AI bubble could be on the verge of popping as China pushes forward with AI technology utilizing cost-effective chips. This technological arms race could reshape the landscape of AI capital spending and profit margins across the board. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Investors awaiting updates on its Blackwell GPU and its next-gen Rubin chip. Shares still down 22% from record highs hit in January. Over the last week, 3 analysts have lowered their price targets on the stock. So, are expectations prices to sell the news, Dan?
If it is sell the news, then watch out for the entire generative AI trade. Because, again, we all thought good quarter, good guidance.
Your acronym.
Yeah, the Gen 8. Yeah, exactly. And I played that game right. I mean, listen, it sold off after the results. The stock was already down, right? There was a lot of negative sentiment. A lot of their customers had already sold off over the prior couple weeks. So I just don't know if there's anything new for them to talk about as far as the product roadmap exists right now. So I'd be most worried if the stock, let's say, rallies because it's been down a lot and then fails, because that is just meaning that there's no appetite for this story right now. Or what is the incremental buyer looking for?
So we were talking about this the other day. I'm more interested in what are they seeing right now, not what is a little bit down the road. What are they seeing right now? Has the story changed? We come back to this. Is there going to be a lot more compute needed for inference? And is DeepSeek actually potentially a plus?
Right.
CapEx story. What is it? Again, CapEx is not written in stone. If companies decide, the environment is not so, we don't view it as favorable. There's too much ambiguity out there. They'll pull back on CapEx. NVIDIA loses to that, I think. That and the fact that they promise in the back half of this year to see a reacceleration of margins. Let's see if they address that as well.
It is amazing that after hearing all of the major hyperscalers come out and raise their CapEx guidance, that there is still disbelief around those numbers, right? That there's still in investors' minds an asterisk next to any number given by a Meta, a Google, whoever.
And remember, those numbers and that guidance was well after DeepSeek. It was not. they had a chance to recant or try to hedge their words or something. So I think it's important. I think everyone's saying the same thing, though, that this is an important point for the market. It's a period where the breakdown in semis has been very clear, and it goes all the way back to last summer. Nvidia's traded the best of all of them, as it should. It's not expensive, but this is an important moment.
The underperformance of the Magnificent Seven companies, barring Meta Platforms, has left investors in a state of concern. Factors like interest rate sensitivity, trade tensions, and stock concentration have played pivotal roles in shaping the current market climate. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Are you a buyer of Nvidia now? Are you a buyer of Tesla now? Which of the Mag 7?
So I'm long Nvidia. I bought it last week and actually aggressively sold those 100 puts. Didn't feel great when it was down at 107, but here we are collecting that premium. Happy to own Nvidia lower than $100. But at this point, in this moment in time, we've had a nice $10 appreciation in the move. I'm being very tactical.
Shares of Nvidia are lower today as they kick off their annual GPU technology conference. All eyes will be on CEO Jensen Huang's keynote address tomorrow, where he's expected to make new announcements on AI chips. Later on Thursday, the company will host its first ever Quantum Day, with CEOs of notable players in the space taking stage alongside Huang. Nvidia has scrambled to retain its AI crown ever since DeepSeek sparked a sell-off in AI stocks back in January. It's 22% below its all-time high amid intensifying competition. So will it do enough to entice skeptics? Let's ask our next guest. He's got a neutral on the stock. Gil Luria is senior software analyst at D.A. Davidson. Gil, we made a Freudian slip that we said it's GPU event, but it's GTC. And I was curious the other day, I thought, what does GTC stand for? And it stands for GPU Tech Conference or something. Point being, this is a super, super wonky thing to have so many people purportedly excited about. Is it overhyped?
Not at all. It's the main AI event of the year. Let's not forget to give NVIDIA credit for a lot of the advancements we have in AI are because they a long time ago realized the potential for their graphics chips to provide the ability to do these transformer calculations that make all of this AI possible, first in the labs at Google and then at the labs of OpenAI. And over the last few years, NVIDIA has done a lot to promote the whole ecosystem. That's what this event is about, inviting everybody that's anybody in AI to talk about what they can accomplish together.
As the dust settles on the battlefield of the stock market, one question lingers in the air. Should you join the ranks of investors eyeing the Magnificent Seven? The future holds both risks and rewards, with forecasts pointing towards potential growth and resilience. But what do you think? Share your thoughts? Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.